Will rising inflation and low inventory levels bring the good times to an end? Hey everyone, it's Ryan Dash here with the Vancouver Life Real Estate Group. I'm here with Dan Vertel, and today we're going to look at a bit of a national economic outlook on, obviously, a focus on housing here, but really trying to make sense of the inflationary pressures that we're seeing in the market, along with the continuing inventory spiral that we have. It seems like we harp on this every week, but it's unfortunately the leading cause of just about everything that we are feeling in today's marketplace. So Dan, why don't we start with kind of a broad economic outlook, and then we'll kind of jump into the regions. We'll look at BC, Toronto, Alberta, and Quebec as well.
Safe to say, I think we're definitely feeling a palpable shift in consumer confidence overall. We've had this, 18 month run up of excessive house price increases, and of course, all of this helicopter money from the government, and everyone's been kind of getting wealthy off of this. We're now seeing excess household savings nationally at almost $250 billion, and
Whoa.
and households, they're still saving something like 14% of their disposable income. For reference, pre-pandemic, that number was sub 2%. So people still are saving a lot more than they were 2 years ago, and they have a lot more money than they were 2 years ago on average nationally. Though, again, this is starting to waver. Obviously, we're talking about high inflation numbers. Last reading was 4.1%. And this is driving up the cost of living, namely households, of course. Fuel and food are sort of the top three headlines that you're going to hear about right now. So yes, the pendulum is starting to swing the other way. I think the good times are starting to slow down. It's been excessive for too long, and it should be slowing down. And of course, we're starting to see this across the nation. A lot of people, of course, still haven't gone back to work, right? And why would a lot of people, when you can sit at home and make more money, just cashing those lovely government curb checks, or CERB, excuse me. But businesses are hurting from this, right? It's hard to get a lot of people back to work right now. We are seeing businesses having to entice employees to come back, or for new employees, and a projected 2.6% wage increase is projected for 2022 to help bring people back to work.
Yeah, I think one of the things that's important to talk about when it comes to inflation, and maybe one of the reasons why we're seeing inflation in the marketplace, lo and behold, I mean, when you went through the pandemic, I think that obviously scared a lot of people, right? So their mentality is now to kind of hoard more cash because of the unknowns of where the potential pandemic might go to, right? And a lot of that 14% that is now attributed to almost $250 billion. When you were looking at pre-pandemic levels, that means $250 billion there in and abouts would be back in the economy. So if we're all holding on to the money and it's only going into things like assets, right? Bonds or homes or something to that effect, that's a hedge against inflationary pressures, which is honestly one of the smarter things to do with it. It it does put pressure on inflation because we still need more money in the system. So M2 money supply will continue to be printed and continue to be pushing and pushing, you know, devaluing, if you will, every single dollar that we have, because the vast majority of this money is being held on to by Canadians and not being put back into the economy. That's why we're having to see things like wage increases and trying to bring people back in and restore some of that consumer confidence, right?
Of course, and a big question there then goes to the bond markets and how they're going to react to these inflationary pressures, because it's basically the bond yields that help set these like fixed mortgage prices, and any increase in these yields from bonds flow straight through to the mortgage market fairly quickly. With bond yields up around from 0.4% in February up now to about 1.1%. This is obviously leading to fixed rate mortgage increases at your major lenders,
Mm.
which is obviously pushing people to variable mortgages. I think they're upwards of 50-50 right now, which is a big increase from where they were pre-pandemic.
That's right. Yeah. Um, okay, so that kind of gives you why maybe we feel it's a high level overview, but why we kind of feel the good times are the sentiment is changing in the marketplace. And I think that's important to recognize, right? And that consumer behavior where we're holding on to cash, we're not spending it, that it leads me to feel like there's more fear than there is, greed in the marketplace right now.
Yeah, there's more talks of things being more expensive and that interest rates are starting to climb, at least at the major banks, with your fixed mortgages. Um, Bank of Canada rate, it's going to go up at some point. So we've gone from, 18 months of everything getting cheaper to now we've sort of hit this bottom in a sense, and now things are getting more expensive. Housing, yes, up the whole time, but cost of living is now starting to increase greatly and at a higher pace than we've seen in about 20 years. So, yeah, sentiment is changing and forecasted for this to trend likely the same way.
Yeah, I don't think we're going to see, 25, 30% rises in prices next year. I just don't see that. I think you're going to see that begin to taper here. We'll start to see interest rate hikes around the corner, especially if inflation continues to do what it's doing. Inflation for, large part, we do need to mention there is a transitory effect right now in inflation, meaning we're trying to get the economy back rolling, right? So how much of this 4+% of inflation is real inflation? I think we have yet to see, but um, you know, it's on everyone's mind.
Yeah, and it's like the people who essentially run the interest rates, Bank of Canada, that are saying it's transitionary. And the funny thing is, they can say that for as long as they like.
That's
Right?
right.
There's no set time. Is it transitionary for 6 months, 6 years? Right?
Yeah.
There's no real cap. So again, yes, we're in transition, but aren't we always?
Yeah. So let's maybe start looking at some BC stats and Toronto stats. We'll start with BC. Um, so year to date, BC residential sales dollar volumes are up 81.8% to 90.4 billion in sales compared to the same period in 2020. Residential unit sales were up 52.4% to 99,182 units so far. Well, the average MLS residential price was up 19.3% to 911,000 in change. Dan, you want to touch on Toronto?
Well, I want to add a
Or do you
little
want
bit
to
more
unpack
to
that?
that. A little bit, yeah. I mean, seeing dollar volume up 82% year over year is tremendous. Or sorry, year to date over year. And yes, there were a couple months last year that were shut down, right? Namely March, April, May-ish. But still, to bounce back to that level is just incredible numbers. And also to be at $911,000 for the average BC home now, like it could only take until next year or early 2023 when we're going to be back here saying, oh, the average BC home just crossed $1 million.
Yeah.
It's not
Yeah.
that far away. And that's sounds a bit ludicrous to come off of my lips here, but that's the trend and that's the reality. BC homes are about to be $1 million on average.
On average. Yeah. And, it's to that point. I made an offer yesterday with a client. We're looking for a townhome in Langley. Both homes sold in and around 80 to $100,000 over the list price. There were two homes, two townhomes for sale in the Murrayville area that we were looking at, and between the two homes, there were 18 offers, 19 offers that were made on both homes
Jeez.
combined. So there's still 17 families out there looking for townhomes, and there was only two of them in Murrayville on the marketplace. Uh, so yeah, I mean, it's a we have a massive supply issue, and these numbers are speaking to that, right? And yeah, it's crazy because if you can believe this, in January of this year, that very same townhome was selling in and around $630,000. It is now selling for $790,000.
It's still happening that quick.
Mm-hmm. So,
Yeah. There are
um,
pockets that are still seeing these massive year over year gains.
Yeah, I mean, that's a local sort of look at things where prices in particular for a townhome in that part of the neck of the woods was up 22% year over year.
Okay. Tough. It is tough right now still. Okay. Let's look at Toronto for a second here. Toronto heating back up. And funny how similar Toronto acts from Vancouver, right? We talked about this on our last cast as well, seeing that things had kind of leveled off, at least price wise, starting back in about May up until September when things took off again. So, shortage of listings, but sales are increasing. Um Sorry. Home sales up about 0.7% last month. And again, is the first increase we've seen in sales since that March peak. Overall, sales are down about 18% though from the record highs. But what's noticeable is the growing disconnect between condos, 416, compared to the lower density 905 detached homes. So it's more evidence that the shift is going back to the big cities, just like we're seeing here in Vancouver. The pendulum swung out to the suburbs and now it's swinging back into condos. So much so that condo sales were the highest on record for the month of September in Toronto. While new listings were down more than a third off the record levels of last year, but they're well below normal, quote unquote, for this time of year.
Yeah.
As a result, active listings are plunging in Toronto, down nearly 50% year over year,
Holy cow.
and close to a 60% decline in condos in the downtown city of Toronto. I think the
Crazy. Yeah.
Yeah, and this number is terrifying for those who track months of inventory. Toronto just set a new record. There is 1 month of inventory in Toronto. This eclipsed the previous lows that we saw back in 2016, and if you were paying attention to the market then, you know how incredibly active and what the prices were doing in 2016. Inventory is now lower than it was then at 1 month, and for reference, again, you need about 5 months of inventory to be in a balanced market.
Yeah, and
Not
that's
even
down.
sellers.
That's down from, I think it was 2.2 months of inventory the month before that too. So it's like, it's a huge jump downwards. And it's scary because all that's going to do is put upward pressure on price, right? And just less and less of a scarce product that is in high demand. Um, you know,
We saw that. I mean,
yeah,
the HPI jumped 2.2% just last month in Toronto, right? And,
yeah.
and similar to Vancouver, that's the biggest improvement since March.
Mm-hmm.
Um,
Yeah.
there you
The
go. So,
last thing we'll say about kind of Toronto here is that the rents have more or less appeared to stabilize, and I think that'll be the case across the nation. The vast majority of international students have arrived. They are going to school now. So while we did see a 0.8% increase this month in terms of rental values going up, I do believe you're going to start to see that begin to taper, which is at least some good news. So if we look at actually particularly Vancouver home sales here, Vancouver fell by 14% in terms of its actual year over year performance in September. Largely, these declines were found in the single family segment, where transactions were off by nearly 25%. Do feel this is largely the case because there just simply is no good supply of single family homes, and the cost of those single family homes is now so high that people are looking to other things like condos and townhomes, much like we just touched on. Condo sales, for example, they hit new records. And this is just a sign that, affordability is one of the leading indicators here. New listings were down 19% compared to record levels in 2020. And that's helped push active inventory down 30%, which is a new 20-year low. That's some pretty crazy numbers.
let's have a look at our neighbors to the east here now in Alberta. So Alberta, as we know, they've been pretty flatline price wise for almost a decade now. But they're playing a bit of catch up, and I think maybe what's happening is a couple things. They're kind of attracting a young, educated workforce. They've obviously got cheaper or far more affordable housing right now, and that goes too with the commercial space. It's becoming more enticing, if you will, for employers to look to Alberta for things like office space, commercial space, and so forth. And even the energy sector is coming to life a bit here, and has a chance to turn around. So looking to that province, very interesting to relate it to the other provinces in their year-to-year home sales for the month of September. Quebec dropped a lot, 28%. Vancouver, as Ryan just touched on, dropped 14%. And Toronto was down 18% in sales volume. In the same month, Calgary and Edmonton were up 13%. Obviously people are starting to pay attention now to that province for the first time in quite some time. And sales were not just higher compared to 2020. They actually came in at the highest September levels in over a decade.
Mhm.
Understandably, that should mean prices are going up, and they are a bit. HPI price, the home price index in Calgary, 8% year over year, with Edmonton trailing at about 5% year over year. Though they've got the pressure behind it, and we
Mhm.
believe these upward trend in prices in Alberta is going to continue to run for the foreseeable future.
Yeah, it's kind of a perfect storm for a turnaround, right? You've got commercial spaces that are cheap and easily accessible for startup companies, right? And I think when you mix that, with affordability, it's kind of set at a lower bar, so it's kind of got what feels like some room to run, which I think the province desperately needs. It's like the black swan compared to the rest of Canada, right? When it comes to real estate, so nice to see some price action there. When we go over to Quebec, Quebec is really feeling this supply issue here. Sales across the province were down 28%, as Dan just touched on. This is including a 31% decline in single family sales. And in particular, in Montreal, is down 37%, which is just a staggering number. Active listings are down also another 29%. This is almost down 70% in the last 5 years. There's just nothing to buy. I mean, I guess that on the flip side, house prices are no longer surging 40% year over year. The gains are still solid though, coming in at 17% year over year for condos and 16% for single families. So still some huge numbers here coming out of Quebec, and really not a very good buyer's market there. Terrifying buyer's market. If you've got a home, it'll be easy to sell, but good luck trying to find anywhere else to live.
There you go. So, quick little update here on our local market. Sales trending inwards of around 31 to 3,200 for the month, but inventory is continuing to drop. Okay, we ended up the end of September with about 9,500 listings. We are already down to 9,364 today. So inventory continues to dwindle away. It is only getting harder, and it's only getting harder nationally. This has been the trend for years, but it has been accentuated in the last 6 to 12 months or so. It doesn't look to change, anytime soon. The appetite is still far more ferocious than the people looking to sell.
Yeah, I think it's important that we note that, like, when we say that the good times are coming to an end, we mean, like, those March numbers, we're not going to be seeing those kinds of growth numbers anymore. We just don't have the supply on hand to allow for that to happen. The other thing is, with inflation in the market now, it is possible this sometime next year you're going to see some interest rate hikes. I mean, major lenders are already in the favor of doing that, right? So hopefully that will taper some of the price increases that we're seeing, and maybe allow for some cooling in the market. But generally speaking, when we just have such low inventory, I think it'll still stay, far above the 10-year averages. It's not all of a sudden just going to get better. but we'll see what happens with interest rates.
That's it for us this week. Thanks so much, as always, for watching and listening. Please subscribe if you are getting some value out of this, and we look forward to seeing you next Saturday morning.